Greetings, millionaires, multimillionaires, and future millionaires. I'm Lane Beene, a 28-year retired lieutenant colonel, a former F-16 pilot, and successful real estate investor. During the past 15 years, I side hustled one single-family house into a multi-million-dollar apartment portfolio with close to 700 units and awards along the way that included Fort Worth Property of the Year and National Multifamily Housing Council Renovation of the Year. I achieved this while working full-time for the Air Force, deploying 5 times to the Middle East, and being a dedicated family man. My goal is to share what I learned to help you become a better investor and move up your millionaire status. I'm excited about today's podcast because today we're going to talk about the future, and we're going to talk about helping you invest your money into the best real estate opportunities in 2020. My goal is to share from industry experts observations and their recommendations on the best place to put your money so that you can become a good millionaire. The overview of today's discussion is broken down into 3 areas. We're first going to talk about the 2019 look back very shortly and analyze our strategy. Then we're going to discuss the current market conditions, and then we'll talk about how to implement those conditions into the best 2020 strategy. But before I get to that point, let me cover a little bit of motherhood or a little bit of administrative points. Yesterday, I conducted a lunch and learn in Fort Worth, and we had a special guest speaker, Boyan Raddick. He's a managing director for Graysteel, which is a commercial brokerage agency here in North Texas. And we discussed this very topic, and we got expert opinions and comments from the audience. The purpose of that, and the reason that I want to bring that up to you, is because you as a listening audience or as a potential real estate investor, it's critical that you get good education based on accurate information and then use that to develop a strategy. These lunch and learn opportunities and ability to network is critical to, one, getting that information and also meeting the people who are in the market and in the operating space. One of the things I'm going to be looking forward to is the Old Capital event in January the 15th, and you'll be able to find more information about that on the Old Capital website, and you'll be able to meet me there as well. My next Lunch and Learn will be January, and again, I'll be sending out information on that to follow. You can contact me if you'd like to on my Facebook page, Become a Better Millionaire, or you can email me at lane.beene@pilot-legacy.com. Okay, enough with the administrative. If you've listened to me before, you know that I greet everybody with the same introduction. Greetings, millionaires, multimillionaires, and future millionaires. And let me comment just real quickly on why I do that. Because I believe you have to believe something before you can see something. You have to have the right investor mindset. That's critical to success, and it may be the only obstacle that is insurmountable, and that's your own mindset. When people have a negative mindset or they don't see themselves as a future millionaire, or as a multimillionaire, then they are programming themselves for defeat. So I want to speak to you as a millionaire. I want you to think of yourself as a millionaire. I want you to talk like a millionaire. If you have a hard time doing that, I recommend this book as a resource that's been very valuable to me. The Secrets of a Millionaire Mindset by T. Harvey Eker. All right, today's podcast, let's get right to the details. Where is the best place to invest your real estate capital in 2020? Before I talk about that, the number one foundational principle that you have to understand is financial strategy. Let me give you an analogy. If the Dallas Cowboys are down by 7 points with 10 seconds left in the game, the right strategy or the right play is not a handoff up the middle. The right strategy may be a pass play to the end zone. That's an idea, and if you understand that, then it's important to correlate that with real estate investments. Depending on where we are in the real estate cycle or the local market, it's important to call the right play, or it's important to have the right strategy in place. So in doing that, that's kind of the context of what I want to speak about today. Let's look back at 2019, figure out how we did in play calling or our strategy, and then take those lessons learned, move them into the 2020 or coming year play or game, and then figure out how to execute the correct strategy and how to do that correctly. Okay, so the 2019 recap. What lessons learned can we derive from 2019, and how can we improve our 2020 strategy? So what things in the market did we see? Well, I work primarily in the Texas market, and I'm focused mainly in the North Texas market, but I think these things are common to a lot of the real estate areas across the country. I certainly saw a lot of outside influence and a lot of outside money coming into the Texas market that elevated the price. Multifamily asset class is very popular, and there's certainly a lot of training facilities and education programs now that are encouraging greater participation. That means more investments or more investors. That means more capital, money wanting to get into multifamily, and that supply of money and shortage of good assets in good locations drives the price up. So that was one of the very first things that we saw in 2019 is the acquisition price in good markets for good located positions or assets continued to go up. A lot of that money was from out-of-state, non-local investors and out-of-country investors as well. So a lot of money, a lot of interest, a lot of education and training opportunities is one of the observations from 2019. Another observation from 2019 that was helpful for the real estate industry was the interest rates were consistently low or below average. A lot of the interest rates are in the 3 to 5 to 6 percentage points or percentage rates, and that allowed the debt servicing on some of these properties to be decreased. Well, that would generally allow the investor to get more cash flow or more profit from the property. However, the sellers, because of the pressure of a lot of buyers trying to capture these good investments, really kind of capitalized on that and took the money that the low interest rates afforded into their own pocket. So a favorable interest rates essentially helped the seller as much or maybe not as much as the buyer. Essentially, the seller was taking the profits of the lower interest rates. So what happened in the 2019 market? Well, those two things and a variety of other events, squeezed the margin, squeezed the profits, and really made a lot of what used to be a more profitable investment reduced it. As an example, 3 to 4 years ago, a average investment would probably produce anywhere from an 8 to 12% yield. But because of the conditions that I discussed, the lower yields now are probably 5 to 10% is a favorable investment. Also, several years ago, prior to 2019, the holding period for these investments was anywhere from 3 to 5 years, was typical of a real estate business plan. But because now the conditions have changed in the market, that holding period is generally longer, 5 to 7 years, or sometimes even longer than that. So the takeaway from the 2019 is this. One is the expectations for investors have to change. I call this strategy kind of like sailing from point A to point B. We're still trying to get to point B as a real estate investor, which is financial freedom through passive income. But just like on any sail or any cruise, you have to constantly be adjusting the winds and monitoring the sails. Well, in 2019, we see what we had to do to be successful, and we had to change our expectations. And that includes the things I talked about. That's my observations from 2019, or the major ones. Now let's look at 2020, and let's look at what we can draw from 2019 into next year's investment opportunities. Well, I believe that you're going to continue to see interest in this North Texas market that's going to elevate pricing and continually compress that capitalization rate or the cap rate, especially in desirable markets, well-positioned assets. So as an investor, what does that mean to you, and where could you be looking for opportunity? Well, I know a lot of investors that are now looking at secondary markets, suburbs, or tertiary markets that are outside of the major areas. Example, here in Texas, Longview, Texas, Abilene, in Oklahoma, Tulsa, some of these areas that typically were outside of the major metropolitan area, those are now becoming more attractive to investors, primarily because of the acquisition price. Additionally, just like we talked about, we're going to have to adjust our expectations because now, instead of looking at a 3 to 5 year hold with associated financing that matches that strategy and an interest or a yield of high or low double-digit numbers, the expectations as you analyze deals are probably going to be a longer hold period, less yield, and potentially lower leverage. So those are some of the things that we need to consider when we're looking at 2020 investment strategies. More so, and also, it's important as these margins get squeezed on investments that the operator experience becomes very critical, because now it's going to be not only the rising tide raises all boats and you just invest in a syndicator or invest in an operator and benefit by compressed cap rates. Now it's going to be more difficult to operate and more important to operate because that margin is getting squeezed on the acquisition, and therefore you're going to have to operate that property for a longer period of time, 5 to 7 years, and you're going to have to make sure that that operator is qualified, credentialed, and experienced. So picking a good syndicator, picking a good sponsor or general partner is going to be very important to 2020 success. All right, 2020. Every time I talk to an investor, they always talk about the approaching downturn of 2020 or a recession of 2020. And so let me real briefly touch on this, and let me talk about some indicators that Lane's looking for, and they are the canary in the coal mine, if you will. So when you talk about the downturn, there's kind of two sides to this. One is the national economy, and then the other is real estate specific. So when we talk about the national economy, there's a lot of different factors that come into play, and they're really kind of outside the scope of what we're talking about now. But let me just mention some of the things that could. One is the political uncertainty of a 2020 election year. Another is the part of the trade wars that we have ongoing, and the tariffs are really kind of making the national economy very uncertain. So I really can't talk about what that's going to happen without getting into another level of detail. So we'll just leave that where it is. But remember that the economic recession and a real estate recession or downturn don't necessarily synchronize. And just because we may be having some economic flattening doesn't mean the real estate market is benefiting or is maybe being disadvantaged. Okay, so that's the macro economy. Let's talk about real estate downturns or real estate recessions. And really, this is not a matter of if, but when. Because just like I mentioned earlier in my sailing metaphor, I'm going to go from point A to point B. Point B for you and me is financial freedom through real estate investments. And I know to get there, I'm going to be facing currents, I'm going to be facing headwinds at sometimes and tailwinds. And so I'm predicting that as a sponsor and predicting that as a partner to compensate for those things. So it's really not a matter of will the real estate market ever turn down or flatten down, or periods or quarters where there will be advantages and disadvantages. It's really a matter of adjusting to those, adjusting the sales, adjusting or tweaking my strategy so that I can still arrive at my destination correctly. So that's kind of my overall principle of how I'm looking at 2020, considering the fact that I can't forecast the future and a downturn is potentially happening, but I just need to be protected from it. But let me get specific on this to help give you some things you can look for. What do I look for? Is I look for two primary indicators. occupancy in the market and the submarket, and then rent growth. Because occupancy will be published through different sources, and you can look at how your property is doing, how your market is doing, and then how your submarket is doing. So as an example, the area of Austin, which I have a current project in, I want to look at that major statistical area of Austin and figure out what the average occupancy is. And then I want to further break that down into the northeast section of Austin, which is where my project is, and I want to look at how that submarket is doing relative to the overall market. And then I want to look at my property and say, how is my property doing relative to the submarket? And that's going to be a good indicator when I see those occupancy numbers trends change over 1 or 2 quarters. I see an increase or decrease in occupancy. That's one of my canaries in the coal mine, if you will, that we may have an impending problem. The second thing that I look at is rent growth. How much have I projected my rent growth to be in my market, submarket, and then my property? And how am I doing relative to that number based on my occupancy? So those two things are the two primary indicators that I look for to tell me, are there trends that are changing? And if those trends change, that may be indications that a real estate downturn or real estate recession could be approaching. Okay, so those are the things that I like to talk about when it comes to real estate recessions or downturns. Now let's talk about the projections of the market in the 2020 year. Well, first off, we already talked real briefly about the economic and the national market, and it's really difficult to say because of the things I mentioned, the 2020 election of the president, the trade wars and the tariffs that were happening. How will that impact real estate? Kind of hard to say, and I wish I had a better crystal ball to answer that question. I don't really have that. But I can talk about the real estate forecast. And for the people that I've talked to, and I've talked to several experts that this is their primary trade and their strike zone, if you will, they're experts in this level, they're having a positive forecast for 2020 because of what I mentioned, the unemployment rates, the job numbers, the national shortage of supply and demand, and then also those occupancy and rent growth things that I talked about before. So the national economy, don't really know, not going to comment on that, but the real estate forecast for 2020, okay, is positive. There's no need to panic, okay, in my opinion. And just because we've been in a long expansion period over 10 years doesn't suggest a downturn for 2020 is happening. For example, Australia is in the process or in the period of a 28-year expansion. So we can still expand. We just need to be very aware of those indicators that I mentioned, occupancy and rent growth, and be ready to adjust and adjust our sales and make operational efficiency changes when those conditions change. Okay, so let me give a real quick brief recap before I get to the last question and most important thing that I want you to take away from today. We talked about the 2019 observations and strategy things that we tried to implement correctly. We brought that into the 2020 strategy, the 2020 real estate market. We talked about operational efficiencies, and we talked about how to use several different indicators to judge or make adjustments to our sales. Now, the big question here, drum roll please, where do we want to put our investment money in 2020? Lane Beene has money to invest in real estate, and I'm looking to do that. Where do I need to do that? There's two things I would recommend and two things that I am searching for right now actively. The number one thing is I'm looking in those second and tertiary markets for well-positioned assets that allow me to have good returns. As an example, a year ago, we were able to find a good positioned property in Longview, Texas. That's a tertiary market, but it had some good opportunity. We were able to buy it at a good price, and we've been able to exceed our pro forma or our financial model. So I would suggest that you now consider, and not necessarily this isn't a promotion for all of these markets because some are not good assets and some are not good markets, but I suggest that you open up your aperture on investment locations and consider these second or tertiary markets. Certainly the ones that are within a suburban or within a commutable area to an urban core are certainly good places I would want to, and I'm looking to invest money in the year 2020. And then the second portion of that you may consider that may not have been a consideration in years prior is development of property. And develop Class A property in good suburb locations is a lot of interest in doing that. And certainly if you can position those between major intellectual capital areas where there's a lot of technology, this sort of market is very strong and very beneficial going forward. For example, the space between Denver and Colorado Springs and Centennial, a lot of interest there. The space between Frisco and North Dallas, where you can combine off the economic drivers of both. Bellevue, Washington, suburb Nashville. If you can have patient capital to develop and have an experienced developer hold those for 5 or 7 years, then I feel pretty good that you're going to be able to get to your pro forma numbers. So those are two of the things that I'm considering for Real Estate 2020 and recommendations for you to bring into your portfolio or at least into your consideration for investors. All right, so let's get an action step item here that you can take out the door and become a better millionaire. One is choose a good team. Okay, take what we have discussed today, bring that discussion to the team leader. Okay, have realistic investment expectations. Realize that today's market and today's sale or cruise, if you will, was different than last year's. And adjust your strategy to look at these secondary, tertiary markets, or maybe some development opportunities that weren't in your cross-check from the 2018, 2019 strategy. Remember, real estate isn't get rich easy or get rich quick. It's get rich for sure. Okay, if you fundamentally, principally base your investment decisions on tried and true real estate examples. I appreciate you listening to me. My name's Lane Beene. I'm looking forward to contacting you and seeing you at the Old Capital Podcast, January the 15th. You can reach out to me. I love to talk about real estate and have a passion for helping you become a better millionaire.